Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Jack Gamble of Nobody Special Finance at the 2023 Silver Symposium. Jack, thank you for coming on the show.
Thanks for having me, Steve.
Yes, sir. Okay, what is your base case for precious metals, being that we're at the Silver Symposium?
So, base case for precious metals, in my opinion, depends on your time horizon. Right now, we have something we haven't seen in this country since the Great Depression. We have a shrinking money supply.
Yeah.
That's been going on since about the beginning of last year. That's interesting, especially considering how we've all been living with high inflation for the last few years, and with all the money printing in 2020, a lot of people have a hard time getting their heads around the concept of a money supply that's shrinking, but that's actually what's happening right now. Between the Fed's quantitative tightening, the raising of interest rates making debt more expensive, and banks being more defensive since everything that happened in March with Silicon Valley Bank, banks aren't making loans as much anymore, and so if loans aren't being made, money isn't being created, plus the fact that the Fed is destroying money, the money supply is shrinking. Now, when the money supply shrinks, there's less cash chasing goods and services and assets, so that puts downward pressure on the price of just about everything, which also includes gold. So there is a downward pressure on precious metals being caused by deflation right now. Now, deflation is something that the powers that be in this country cannot abide, because we owe $30 trillion, and if you owe $30 trillion, you can't let that deflate, because that becomes even harder to pay off and harder to service. So we'll most likely return to inflation at some point. The money printing and the zero interest rate policy will probably come back, but it's not set in stone. We don't know for sure that it'll come back. If it doesn't come back, that is bad for the price of everything. Yeah. Everything goes down in that scenario. If it does come back, then we're right back on that course of hyperinflation and prices going up perpetually. So there is that fork in the road that's ahead of us still, and it's hard to tell which way we're going to go right now. There's some indications it could go one way or the other, and unfortunately with precious metals, it's kind of a binary trade on what the dollar does. There's other factors, obviously, but right now, if no other action is taken, the price of precious metals would go down because of deflation.
Okay, that's interesting. You brought up interest rates, which was going to be my, you watch the Fed, yep. Pun intended, like a hawk, okay? And what do you see them doing with interest rates right now?
They've been pretty clear about this, higher for longer. I mean, the market doesn't really agree. They've been telling the Fed you're bluffing. You know, Jerome Powell said in his last conference, you know, the soft landing is not our base case, but we would still stay in restrictive territory, yeah. Which means there's probably a recession coming, and we're not going to lower rates, yeah. Which means we're going to hurt you more, is what he said in the interest rates. Yeah. So, I mean, they're telling us, they're not using those words, but if you look in between what they're telling us, they're going to tell you, we're going to stay tight for a while now, and, you know, it's going to get hard. And a lot of people right now, like if you look at CME Watch, the Fed tool there,
Fed Watch tool, yeah.
There's only about a 24 or 25% likelihood being priced into the rate futures right now that the Fed hikes in November. And I don't understand that, because Jerome Powell made it very clear we're going to raise again, and we're going to stay there for a long time, and the market doesn't believe him. I believe him. I think he'll do what he says he's going to do.
Okay. Yeah. Okay. Interesting. Okay, so you're in the higher for longer camp.
Definitely.
Okay. Yeah. All right. You just gave a 45-minute presentation on AI stocks and the bubble that we're approaching in there. Can you summarize that down for our viewers in about a minute or two?
That was the diluted version, that 45 minutes. So I can tell you, I've done a more detailed, stories about this on my channel. You can check those out. Really what it boils down to is NVIDIA is the company that's driving AI mania. The Magnificent Seven stocks have propped up the whole stock market this year, right? Yeah. If you take away those 7 big tech stocks, the whole stock market would only be up 3 or 4%.
Yeah.
Without AI, this market would crash. And the AI story is being driven by growth in NVIDIA's earnings. And as I've looked into what is driving NVIDIA's earnings growth, I have found a lot of sleazy business practices by a lot of sleazy companies with history of some very sleazy activities. It centers around a couple of key companies like CoreWeave, like Magnetar Capital, the hedge fund that made the GFC worse, and even now some of the guys that were involved in Wirecard and the biggest fraud in the history of Germany, it looks like they might be involved with fluffing NVIDIA's earnings. Tether, which is one of the biggest crypto frauds in my opinion. The people who are the source of the cash that is flowing into NVIDIA are very shady. Okay. And that makes me doubt NVIDIA's motives, their conduct, their business practices, and NVIDIA themselves, they have a history of financial fraud. They committed financial reporting fraud in 2000. The CFO had to settle with the SEC for that. They were making inappropriate disclosures or insufficient disclosures in 2018. They just settled for $5.5 million with the SEC for that recently. So NVIDIA is not a squeaky clean company, and they're doing business with some people who are definitely not squeaky clean. It makes me doubt the whole narrative.
Yeah.
It doesn't make me doubt the technology. I believe the technology is real and it will change the world, but for some reason they're choosing to sell this coveted technology to some of the worst people on the planet, and that doesn't make sense to me. That makes me very nervous about the company.
Yeah, that's a red flag for sure. Okay, wrapping up. What is your favorite commodity right now?
I have a soft spot in my heart for silver, always. Even though I do believe that we're probably, at least in the short term, heading in a deflationary direction, I still nibble at gold and silver on a regular basis. The same thing with Bitcoin. But my favorite commodity right now, if you put a gun to my head and said I had to invest in one commodity, it would probably be oil.
Okay.
I think oil probably has the most upside at the moment. What's going on with the Saudis and the Russians and restricting oil production right now is about the same number of barrels that were dumped onto the market last year with the Strategic Petroleum Reserve.
Yeah.
And what we did last year took oil from 130 a barrel all the way down into the low 60s.
Yeah.
So if the Saudis are now reversing that, that would suggest, all other things being equal, oil would be headed back to $130 a barrel. Now there's one big asterisk there. If there's a black swan market event, if the market crashes, a lot of oil demand is going to go away very quickly, so that could offset some of that. But right now I still think the net force is in the upward direction on oil prices.
That's interesting, because we're kind of getting to a point now in our portfolio where our uranium bets have been in place for the last year and a half or 2 years. We're going to have to start taking profits here really soon. How long that profit-taking session will last, I have no idea, but we need to rotate it into something. And oil is extremely exciting when they just print dividends, you know? I mean, they just pay. So that's interesting. Okay. Jack, Nobody Special Finance, thank you very much for coming on the show. Thank you for tuning in. Hit the like and subscribe, and we will talk to you next time.